Hey, Bethany Bump. Hello.
Hey, Charlie, how's it going?
Good. It is September 28th,
How we get here?
2022. And from one real estate professional to another, what the hell is going on?
Chicken Little, right?
Yeah, it kind of feels like that when we talk to our clients. I know there's a lot of concern, a lot of nervousness out there, but we want to share some news that the home buying public may find interesting. Bethany Bump from Legacy Mutual Mortgage. You have heard all the grumbles because I'm lucky. People always are excited about a new home. And then they talk to you and they say, and how much is that going to cost me?
That's right. What is that interest rate? But no worries, because we have some tools to keep your interest rates low in this high interest rate environment right
And we do
now.
want to throw a quick public service in there that while these are some of the highest rates we've seen in modern history, if you go back to 30 years ago, which wasn't that long ago, take it from someone my age, I remember it just like it was yesterday. Interest rates have been much higher. Over, I think, the last 30 years, they've averaged in the 13% range. I've heard that. So while a 7% may seem very high to you right now, go ask your parents or grandparents about interest rates, and they're going to laugh at you. So let's keep everything in perspective. It is what it is. The Fed's trying to get this inflation down, so we're not paying so much for everything else. And this is just one of the consequences we're dealing with recently. And Bethany, I had a client that asked me about something they had heard about, a 2-1 Buydown Mortgage Program. And I told them I have never heard of such a thing, but I knew someone who probably had. And that is exactly why we've got you on today. Tell us about this 2-1 Buydown Mortgage Program.
Yeah, I would love to. We are seeing a lot of sellers willing to pay for some buyers' closing costs. So the last 2 years, the sellers were not really willing to negotiate the sales price, closing cost, anything. So our buyers have shifted into a market where they can take advantage of the sellers paying for some of their closing costs. And we have come up with a strategy for them. And I'm going to share my screen because sometimes it's just easier to see in numbers
Yeah, I want to see this.
what we're talking about. So essentially, tell me when you can see it.
I can see it.
Perfect. Essentially, a 2-1 buy down is a shorter term buy down. So you're going to get a bunch of interest savings within those first 2 years, which that's kind of what economists are predicting, that in the next 1, maybe 2 years, interest rates will go down and people will be able to refinance into that lower rate. So in the meantime, what we're looking at for some of our buyers who qualify for this, and this is on all our programs, whether it be conventional, FHA, VA, USDA even, we can utilize this program.
Okay.
So let's just say at a high end right now that an interest rate is at 7% for a client buying a $500,000 loan amount.
Okay. Loan amount $500,000. Okay.
500,000, yes. So a monthly payment typically at 7%, which you can kind of see in the year in that year 3 to 30. The principal and interest on that would be about $33.26.
Okay.
Okay. So what we're proposing on this 2-1 buy down is that first year we're going to decrease that interest rate by 2%.
Okay.
So instead of paying a 7% rate that first year, you're going to drop down to paying 5% interest rate. Okay. So that drops your payment down to about $26.84 for that first year in principal and interest.
Mm-hmm.
So significant savings.
Yeah, sure is.
Then on year 2, we're going to go on a tier, right? So it's going to be 1%. lower. So then you go to a 6% interest rate, and your principal and interest jumps up for that second year to the 29.98.
Okay.
Then year 3 through 30, it's going to be the regular interest rate, which you would have had from the beginning anyways, if you're not using this option. So essentially what we're doing here is the seller is going to prepay for the buyer their interest savings in those first 2 years.
Mm-hmm.
Okay, so what you save on an annual basis by cutting your percentages 2% then 1% in this scenario is about $11,640.
So as a realtor, I would need to negotiate for my client that a seller paid $11,640. We would put it towards buyer's closing costs, just like we always have. In this case, of course, the $11,640 would go towards this 2-1 rate buy down, and they are in essence paying your interest in advance. I've never heard of something. What? I hope I don't throw you for a loop. What makes this different than an ARM, for example?
So
an adjustable rate mortgage.
Yeah, an ARM, essentially, the sellers don't have to pay for you to get into an ARM.
Okay.
And an ARM can adjust at any, it depends on what kind of ARM you get into. So let's say you get into a 5-1 ARM. At that year 5, your rate is going to adjust based on what those current market conditions are.
Okay.
In this scenario, you are essentially on a fixed rate for the next 30 years. The seller's just paying for the first 2 years for your rate to go down a bit.
Okay.
So I hope that makes sense. But
yeah, so with an ARM, you're gambling on, well, I don't know. I know
going higher than the 7%.
Yeah, I've asked you about ARMs, and it sounds like it's still not something that people are rushing to for whatever reason. Is that right?
Yeah, right now we're not seeing that the ARMs are that much better than the fixed rates at this point. That could change tomorrow. But right now you're maybe getting an 1/8, maybe 1/4% better in interest rate to do an adjustable rate. So people aren't wanting to go with that risk currently.
Okay. And then I'm not a mortgage expert. I know just enough to get people over to you. I know a lot about mortgages, like Bethany's phone number. Why don't you call her?
I love that.
But so this $11,640, if you were going to get that from a seller and use it to buy discount points to lower your interest rate, would it not move the needle this much?
It typically is not going to move it a full 2%.
Okay.
We might be able to get to that 6%, which some people who think that interest rates aren't going to come down in the next 3 years, it might be the better solution for them for the long term.
What I like about this is you do know where your hard backstop is, as opposed to an ARM, because let's say the rates went to 9% over the next couple of years, you could potentially be on the hook at the end of that readjustment period, right?
Definitely. And this isn't going to balloon. So let's just say interest rates for some reason do not come down.
Yeah.
You are still at that 7% at that payment.
And my guess is that you as a lender are qualifying people at the 7% payment.
Correct.
Is that right? Okay.
That is correct. You have to qualify on all of your debt to income ratios at the highest end.
Okay. Very interesting. Is there anything more that you'd want to add on this, other programs, et cetera, or things you're seeing in the market, Bethany?
Yeah, I mean, we are seeing a lot of the 2-1 buy down. We're seeing a lot of the permanent buy down, which we talked about, where people are staying in the longer term rates at the lower interest rates. So just a lot of different strategies on how to use sellers' money to get your payment lower or your closing costs lower.
Well, we certainly appreciate you sharing that information. Now I can call that client back and tell them, yes, I've heard of a 2-1 buy down program. And once again, give them your phone number.
That sounds great.
Guys, thanks so much for watching. If you have any questions about mortgages or the real estate market, we encourage you to put those comments down, or your questions down in the comments. If you're watching this on YouTube, I'd ask that you subscribe for more real estate updates so you'll get alerted when we put out more information about the San Antonio and Boerne and Fair Oaks markets. Don't want you to miss any update. It's not all doom and gloom. The headlines will make you think that, but the truth told is, if you want to look like a genius in real estate, buy a home and wait a while, because typically the longer you hold that home, the smarter you look. And all of this sure beats renting, because again, we always talk about that. You may be spending a little more on interest rates right now, but those are still a federal tax deduction, aren't they, Bethany?
They are, yes. Still a write-off, and it beats spending 100% on interest and rent.
Exactly. You never get that money back. No equity in the growth of that apartment. When you move out, you get nothing except for maybe your security deposit if you're lucky. So home ownership is still the best option for you, we firmly believe. Again, put your comments down below. And thanks so much. Bethany, if they want to get a hold of you, what is your phone number?
210-854-4460.
Thanks so much. You have a great day.
Thanks, you too.